Hello, traders. It's 8:03 a.m. Chicago time on the 14th of January 2019. Thanks for joining me again, and hopefully you had a great, restful, reviving weekend. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, risk off again. You probably noticed the last three or so sessions. We've had, or at least a couple sessions, we've had risk off, and then we've tested lower and pushed up, which was our primary scenario on Friday for Friday's session. And we're seeing risk off again. The markets, the S&P's opening just below Friday's range. I see the same in the NQ. And so on. The market seems to have really slowed down in terms of range and how it's trading. The catalyst for this is being attributed to the fact that China, December exports fell 4.4% year on year in December, the first such decline since March 2018. It was the largest fall since the 6.2% decline in December 2016, showing there's just a slowdown in China. Also, we're seeing a lot of chatter from Europe on Brexit. Prime Minister May begins a last-minute attempt to salvage her Brexit deal, warning that a rejection could derail Brexit itself. We're also seeing some indications of a technical recession in Europe, with Eurozone November industrial production data being the latest in a batch of disappointing releases for the region. And then finally, the big earnings kickoff with Citigroup having released this morning. Citigroup came out with $1.61 versus $1.55 in per share earnings. But revenues fell short at $17.1 billion versus $17.5 estimated. There's nothing on the calendar for today, so we'll move right into our review. Here's what we expected on Friday. The main plan being the green, the secondary being the, whatever that is, pink. Friday was looking for a drop. Looking for as far as 25.70, 275, looking for it to rotate back up and push that high. We ended up with a bit of a hammerhead high on the volume profile, very odd looking profile that we came into on Friday from Thursday, and so the expectation is this incomplete high is likely to get tested again. Here's what we actually got. We dipped down, but we couldn't quite get to that 25.72 area. We dipped down just a little bit, 25.77 from the open, and then found buyers. It was very, very choppy. We extended the IB high out, so we had range extension to the buy side, and so was looking for the prior day's close and the point of control as targets, but it got to the prior day's close and pushed into 25.96. Prior day's close is 25.93.75, and then it just pulled back to mid and VWAP, and then just sat sideways for the rest of the session. Very, very choppy. One thing to note about Friday is the total volume for the RTH session, 935,000, really way off from the prior day, 1.23 million, and the day before that, 1.3 million, and then the day before that, which was 1.36 million. As you can see, the numbers hidden back here, just volume keeps falling off. And on Friday, it fell off quite rapidly. And so that's what we saw on Friday. We ended up with another weird hammerhead kind of point of control on Friday. Very bizarre. closes. We see a lot of selling into the close in terms of delta, but price doesn't move. So there's a lot of volume that goes off, but nothing shakes it. Nothing happens. And so we end up with this weird looking profile at the top. That's Friday's play. We never broke the highs expected by scenario 1. I expected at least a test and a push through 2600. I was looking for 2607. 2607 is a key target above, and we were well within range to take care of that. It only required 40 points of range. We just didn't have the interest. As we sat sideways in this balance range on Friday, Delta was just falling and falling and falling. No trend at all in anything across the board on Friday. Really a super boring trade, in my opinion. So that's what we had as we came into Friday, and that's how Friday played out. Here's the overnight. The overnight session opened in a gap. Friday's close is 25.95. We opened at 25.88.5, 6.5 point gap. Initially attempted higher and then has fallen and stayed well below the mid. The mid is this blue line right here for the session. Stayed well below the mid and VWAP throughout the session. We had the China stuff here, and then we had the European. The European Open was right in here. The European Cash Open, right in here, and we've been weak. We have basically a B-shaped profile. This does indicate potential long liquidation type behavior coming into today. It's showing a lot of weakness. Now, again, for the last couple of sessions, we've had some gaps down, and we tended to revert back, or we tended to get responsive buying back into the range. So that's, to me, unless that changes, that's what's expected. So I'm paying attention to that. Price is 100%, shows the inventory, the overnight inventory shows 100% short in price and in delta this morning as we come in. Okay, so that's where we are currently. Looking at the big picture, yet. Looking at the big picture, what have we done? So let me pull in the big profile. So this is 2018. The entire 2018 is represented in this kind of pinkish profile. And we hit all-time highs at 29.50 in the current adjusted contract in the futures. And then we have dropped off. We ended up consolidating. We've had some pretty big moves in October, and then we ended up consolidating in a wide range throughout October. That range was 26.07 at the low to 28.23 and a quarter on the high, below the 50 and 200 day moving averages in October and in November. And then at the beginning of December, we ended up selling off fairly strong, put in a new low at 25.87, extending the MC low, pulling back up to 26.90, unable to get back above 2,700, and then we gave up this big point of control right here for the year, and then from there it's just sell. Pretty aggressive selling in December, and then we've been walking this back up since then. So this last low was put in the day after we came back from New Year's, and then we've been running up. And what we've got now is the market has pulled back up to the prior MC. So 25.87 was a key figure there. We've pulled back up, and what we've done is we've consolidated now for 3 days at these prices. We have an MC point of control, 25.85 now, just above. and we are not able to continue to attack this micro composite that represents October, middle of October till middle of December. And so overall, it seems to have come up on high. You could see the range. You could see this range collapsing. This pane here represents range for RTH only. You could see the range, just tremendous, huge ranges, 130 points plus on this bar, and then just falling off and then completely collapsing back to what we would consider to be the mode. It's inside of the what we would call normal range, which currently is between 27 and 25 points. So what this is doing is as it's pushing up, volume's falling off a cliff right there, and so is range. And so we keep grinding, and there seems to be less and less interest as we push higher. So this morning coming off, the fact that we're opening with it coming off a little bit, and trading just below, currently trading at 25.74.75 right in here. It's trading right below the prior day's low. Tells us, but we're still inside of the 3-day balance zone right in here. Tells me that there's a high probability of a test of the MC point of control from last week, which was again at 25.85. So to look at our current what our current expectation is, the primary expectation for today is to be responsive. We are balancing in this range. However, the profile is not Gaussian at all. It does not show consensus on price. It's important to see what the profile shape is saying. Are we balanced? Are we piling in? Are we facilitating trade really well? And when we do, then anything that could reprice the value of the market can give us the fuel, because a lot of people have piled on to form that fat profile, which we don't have. Then we would break away pretty quickly in general. Today, I'm expecting an open auction against this 25.72 area. I'm looking for responsive buying back into the range. I'm looking for a push back to 25.85 to tangle, and then back up towards the middle of the range of Friday. I'm not seeing anything on the calendar that's likely to push us around. There are no earnings. Citibank's behind us. So I'm looking for responsive buying and further balance, further consolidation, and a further creation of a balanced profile on these 3 days. So if I put a profile around these 3 days here, you could see that it's getting fat. It's getting fat, but it's the top of it tapers off real quick. I'm expecting it to extend. I'm still expecting it to extend through to 26.06. That's the key scenario. Now, how do I trade that? I'm looking for, do I get any buying today? Do I get any buying into the 25.72 area or not? That's really what I'm paying attention to today. So if we don't get that, then then it's likely to continue lower, and then we get scenario 2. Scenario 2, open auction again. Again, we're inside of a composite, push higher, and then as buyers come in and try to buy, they're unable to push through into the 25.85, finally give up, fall back out of range, and then start working its way down into 25.62. And then we have this zone here that's fairly open all the way down to 25.50. And I'm looking for that to be the secondary scenario. So again, in that scenario, we open up. As we push higher, I'm looking for the quality of how it's gaining ground at the stock zones 25.81, 25.85 area. If it's lifting and lifting and lifting and lifting and not getting any price territory or any price gains, that I'm looking to short it. And if I short it, I'm looking for it to break through the OS low. If it breaks through the OS low, I'm hanging tight again for the low of Thursday, 25.62. And if it gets through there, then I'm looking to hang tight for 25.50, the 25.50 area. That's the whole point of these scenarios. It's not to predict the market or predict the future, but to tell us what areas we anticipate the highest probability of a turn if it does turn. And then if we do take the trade, we're not taking 6 points of risk and taking out 2 ticks of gain. Once we're in, we want to commit to the key areas, and in creating a scenario, creating moves, potential moves like on a chessboard, helps us see where those might wind up. Okay, that's what I'm expecting for today. I'm not seeing Powell on the calendar anywhere. I don't see that. I'm not sure. But I'm not expecting anything on the calendar today, and I'm expecting the market to move under its own power. Given Friday's diminished volume, I'm expecting that to carry over today. It is Monday, tends to be a slow day. Take it easy today and just wait for the market to tell us what it wants to do. If you don't trade even for the first 2 hours, no big deal. I mean, if you're not seeing your edge, you're not seeing your edge. It's just the way it is. So try not to hurry through and understand that all trades are random. It doesn't matter how good I am, how long I've been trading versus someone who's just started out. The outcome for our trades is random, right? I don't know more than you do. I just have, potentially a more vetted out or more seasoned plan, potentially. Good luck today, and I'll catch you tomorrow morning at the Trader Bite. Good luck.